So it's important for me to start by reminding you that this is all coming to you courtesy of the mission and service of the United Church, and to those who give generously and support mission and service, this workshop and a lot of the work that I do is in fact a small part of what you make possible. So thank you so much for your support of mission and service, and I know that Kincardine United Church is a good mission and service supporting congregation. So thank you, and thank you. Here's what we're going to do. Some folks like to know what the journey, where the journey is going to take them. This is where we're going tonight. We'll finish a couple of quick introductions. We'll talk about what some words mean so that we're all using them in the same way. Some ideas about planned giving, things you can do, the different types of gifts that you can consider, and then things that planned giving can support, and we'll wrap it up. Now, this is actually a two-part webinar tonight, and I understand that some of you are staying on for the second part. The second part is mainly aimed at the leadership of the congregation, and we'll talk about what you can be doing to set up the planned giving program at Kincardine United. Any of you are welcome to stay for that, but if you're just here for the, I'm interested in making a gift and I wonder how I can do that part, then when we're done this agenda, you can leave. And you'll know when we get there. Okay? Wonderful. Let me find. This is the joy of sharing the screen. I need to find the chat box just a moment and start mine up again because it goes away when I do that. Chat. There we are. It's hard to watch it and keep an eye on it if I can't see it. Good.
Okay, I've got it open so I can see it.
Good. Between the two of us, we're good. So as I said, I'm Dave Jagger. I am your friendly neighborhood stewardship and gifts officer. 26 years of congregational ministry experience. Husband, father, grandfather. Last August, for the very first time, it was very exciting. I live in Elmira, and my wife and I live in Elmira. Our three boys are all grown up and married and out. So we are empty nesters. Deb is a teacher. So that's a bit about me. My role in all of this is to help you get involved in funding what you love. This is not a paid political commercial. This is not Dave works on commission. This is not, if you don't buy, we cut the possession. There's none of that stuff. This is about information so that you're able to do probably what you're already doing now, and that's being generous and generously supporting the congregation and the ministries that you care about and that you love, but in different ways. You may want to support your local congregation. I would hope that would be the case. You may want to support outreach work through different organizations that the United Church is a part of, like camps or other mission groups. There may be programs through the national church that you would like to support, including the mission and service of the church. There's lots of different options and lots of possibilities for you to be involved with, so you can continue to support the things and the programs and the people that you care about and that you love. My job is to help you do what you want to do. I say to people, you may have been told before in your life that it's not about you. Well, in this case, it actually is about you. I get to help you do what you want to do. So a planned gift is a way to make a difference after you're gone, and depending on the gift approach that you take, also while you're here. As we get into the different types of gifts later, you'll hear me say you don't have to die to do this. So there are things that you can actually do right now, which is really neat. Planned giving is a testament of your faith. It's a sign of your care and a belief in the congregation or the missions that you want to support. The vast majority of planned gifts are future or deferred gifts, things that you set up now that you plan, and then that take place at some time, hopefully a long time in the future, when your life comes to an end here on the earth. Planned giving, good planned giving, takes a team to make it happen so that you get what you want. First and foremost, your family. If at all possible, we highly recommend that you discuss your plans with your family. This will be maybe perhaps the first time in their experience, but this will be one time in their experience where you will not be here to tell them what to do. So you need to tell them ahead of time, this is what I want, and this is why I want it, because then it's much more likely to happen. So please be sure to discuss your plans with your family. You'll want to get a lawyer involved, especially if you're making changes to a will. Financial advisor is somebody else that you may wish to have on your team. Some of these will depend on what your situations are. An accountant is a good person to have on board. A funeral director. Whether you plan, whether you choose to prepay or pre-plan, it's great to go and learn. What are my choices? What am I going to need to? What decisions am I going to need to make around my remains and funeral service? All those types of things. Your minister, Gord. That's your cue. Say yes.
Yay! Yes.
I had often thought when I was in congregational ministry how much easier for everyone funeral planning would be if we actually knew what the deceased wanted. Many times I sat in a room with their family, and not only were they, completely distraught because the death was very recent, but they had no idea what mom, dad, grandma, what they wanted, even their spouse sometimes. So, write it down, think about it. What would you like at your funeral? What hymns would you like sung? Do you want to give people a chance to speak or not? Personally, I want helium balloons at mine. I want it to be quite a celebration. So we've talked a bit about that, but think about what you want and let your minister know. And then there's me, your United Church Stewardship and Gifts Officer. I get to be part of the team as well. So, how is planned giving different than some of the other giving that you're likely already doing? You may or may not know, but you actually have 3 pockets of giving. Can anybody think about what those might be? And you can either type it in the chat box or you can just say it if your microphone's turned on. What might your 3 pockets of giving be? This is where we find out how quickly people can type. That's a good idea, Gord. Gord typed assets, anticipated earnings from insurance and investments. Anybody else have a guess? Back pocket, front pocket, chest pocket.
Empty pocket.
Empty pocket. Well, pocket number 1 is your earned income. So this is the money you usually use to pay the bills. This is what comes in on a regular basis, whether that's a pension or an hourly wage, a salary. This is the money that's coming in that you're using to pay the bills, pay the rent, pay the mortgage, that type of stuff. Pocket number 2 are your accumulated assets. So that's where we're starting to get into the things that Gord and John both put in the chat box. In theory, and this is not true for everyone, and we know that, but in theory, the longer you live, the more stuff you accumulate.
Exactly.
That could be savings accounts, your house, a car. That could be RRSPs, RIFs, those types of things. Belly button lint. Yes, Gord. The 3rd pocket then is your estate. That's what's left when you die. And I hear people often say, oh, I won't have an estate. What they actually mean, I think, is I won't have a large estate, because we will all have an estate. There will all be something left behind when we are gone. The question is, how big will it be? Now, the church is really good at asking people to be generous and to give from pocket number one. We do it a lot. Back when you were meeting in person on Sunday mornings for worship, you did this thing called the offering. Remember that? That's pocket number one. Can you imagine the surprise on your offering counters if they went through those envelopes and found the deed to someone's house? We just don't expect that because that's pocket number two. We ask a lot about pocket number one. Do you ever have a church supper or a bazaar or any of those kind of things? That's pocket number one. When I hear people and trustees and treasurers and ministers and finance people lamenting, people are giving as much as they can. They can't give any more. They're usually just talking about pocket number one. Planned giving is about pockets number two and number three. Making a gift to the church from a donor's estate or their savings, not their regular income. And that's why PAR, PAR, pre-authorized remittance? That's why PAR technically isn't part of planned giving. You have to plan to do PAR, but it's still tapping into pocket number one. So yes, we like PAR. Yes, we encourage PAR. And I bet congregations, and maybe yours has discovered this with the COVID stuff, how important PAR is and those who are choosing to give that way. But we're not going to talk about that today. So what can planned gifts do? Gord?
Yeah.
I should have probably told you this ahead of time, but you're a quick thinker. Do you have, has Kincardine United Church received any planned gifts lately?
Yes. In fact,
tell us a little bit about that, please.
We received a $10,000 bequest so that we can make the entrance at the top of our outside ramp accessible with an automatic door and a button and all of that sort of stuff to go with it. And Jack, you would know more about that as part of property and so on, but that would be one example.
That's great. So there's someone who wanted to help the congregation the building be more accessible to the community. And this was a way they chose to do it, through a bequest in their will. That's excellent. Do you have any other good bequest stories or other kind of planned giving stories you'd like to tell, Gord?
We wouldn't have the flat screens in the sanctuary and the laptop computer and the digital camera that we now use not only to record our services for broadcast on local cable TV, but to live stream without a bequest. Donna, you were going to say something.
Donna, you're muted. There you go.
We have that $10,000 bequest, which was given to us, but it's held in trust. So the people made sure that we were earning some income from it, and it would continue because we're not allowed to touch the principal, but we get an income from it continuously.
Excellent.
We actually have had others. Can you hear me?
Yep.
We've had others along the way, $2,500 ones, $5,000 ones. Most of them have been applied, though, to specific projects. And the way it sits right now, we only have 2 bequests that we're dealing with in our investment portfolio, governed by the trustees.
Very good. So you're familiar with the difference that planned gifts can make in the life of a congregation. You've already got some good stories that you can tell to inspire people to make the choice to set up a planned gift themselves, or at least to explore the possibilities. That's wonderful. That's great. So planned gifts, as was just indicated, are overseen by a policy. We share stories of how they make a difference in the life of the congregation. And that is a good way to encourage people to consider this as a way to be generous. Now, there are always folks who like to see some numbers. So here's some numbers. The United Church of Canada, not the National Church, as a whole denomination, the United Church of Canada receives about almost $18 million a year in bequests, in planned gift income. The good news is that 80% of that, on average, goes to congregations, which is not to say that we take the other 20% and send it other ways, but that's where it's been designated to go. So 80% of the gifts, not of the money, goes to congregations, because that's where the people who gave it wanted it to go, and they wanted to support their congregations. 15% of bequests and other planned gifts that come in are designated specifically for mission and service, and 5% are for other programs that are run through the National General Council Office programs. That could be like the Healing Fund, those types of programmings. Every year, when we process the gifts to mission and service that come in, what's interesting is, for the last, well, I would say the last 10 years, whether mission and service is up for the current year at the end of the year, or is slightly down for the current year at the end of the year, usually depends on planned gifts. If it's a, I don't mean this to sound the way it might, if it's a good year for receiving planned gifts to mission and service, then mission and service does better. It's interesting. So that's another option, in addition to supporting your local congregation, of course, is to support mission and service, or hey, why not do both? It doesn't have to be either or. There are some tax benefits to charitable gifts. These apply to any kind of charitable gifts, but they also apply to planned giving. Assuming that your taxable income is less than $200,000, and that's usually a safe assumption, you get a 15% tax credit on the first $200 you give to a charity, and you get 29% of your gift as a credit on the rest. That's federally. In Ontario, the Ontario government gives us a 5.05% tax credit on the first $200 we give, and 11.16% on the rest. And this is where I say, if you ever get a chance to talk to your local MPP, you might want to mention that they could do better in giving tax breaks for charitable gifts, because that would encourage people to be more generous. What does that look like? Well, it looks like this. If you plan to make a $1,000 gift, then federally, you will get tax savings of $262 on that gift. And provincially, you will get tax savings of $99.38 for a total savings on your taxes of $361.38, which means that $1,000 gift actually only cost you $638.62. So you can celebrate that you gave $1,000 and got a $361 rebate on your taxes. Or you could think about that ahead of time, talk to your team, maybe your accountant, and say, so how much am I going to save on taxes if I make a $1,000 gift? They'll tell you $361.38, and then you'll give $1,361.38. So it actually costs you $1,000. And the charity you're giving to will get the extra 360 some odd dollars. So you could do that too. That's another way to come about it. But there is a tax benefit to making charitable gifts, and planned giving is part of that. Now, I have not talked to anybody yet, and I don't think any of my colleagues who do this work I've not heard from them either, that this is the reason why people give. People don't give to get the tax credit. The tax credit is a nice bonus, but people give because they care. They give because they're disciples of Jesus, and that's what we do. And this is a way that the government encourages us and rewards us for it, but it's usually not the main reason why people give. You received a bunch of, I think, links or attachments already ahead of time. I sent them to Gord, and Gord told me he had sent them out to you for a number of resources that we have and provide for this work. I'm assuming you have not read them all ahead of time, and that's good. If you have, wonderful, but you didn't have to. And so the idea of those is that they're there to help provide you with some information that may be helpful for you as you consider making a planned gift. The Will Workbook is one of the most popular resources that we have. Highly recommend it. It is not a will kit. So if you work your way through it, it doesn't make a will, but it will make it so that when you go to the lawyers, you've got all your decisions made. You've already decided what you're going to do, and the Will Workbook helps make sure things you may not have thought of get taken care of and covered in the will. The one that I found in there that I would not have thought of was pets. How do you want your pets to be taken care of? Who gets the pets? Those kind of things. So it's a great resource, and it also means then that if you keep it up to date, all of your estate choices and plans are in one place. So you can make sure that your executor, executrix, whoever's going to look after your estate knows where the workbook is, and now they know what you're going to want, and you've made their life easier in what will be a difficult time anyways. I kind of jokingly say, if you want to have a really interesting conversation around the dinner table with your family at, I don't know, Thanksgiving or Christmas or Easter, Christmas works great because you could put one of those will workbooks in each of the kids' stockings. Because you care about them and you want them to make sure that they've got their plans in place. But it'll make an interesting conversation. So
We're
Gordon,
more apt to
link
put
to all
it
of these.
in our stocking.
Sorry, what was that?
Said that kids are more apt to be putting it in our
In your
stocking.
stocking. Yeah, well, that works too. Yep. So Gord has access to all of these. You probably do too as well. And if you need any more, you can let me know. So let's talk about the different types of planned legacy gifts that the United Church provides. Number one, this is one of the ones I love the best. This is the freebie. Doesn't cost you a penny. You don't need any money to do this. This is a memorial gift. This is where you let your family, your minister, your funeral director, you let them know, where would you like your friends and your family and other people to make memorial gifts in memory of you when you die. It's amazing how many times when I read the obits in the newspaper, they mention that they were a longstanding member of such and such church, and they would like their memorial gifts to go to the SPCA or the Cancer Society or Heart and Stroke. Nothing wrong with those organizations. They're big organizations. They have a lot of fundraising that goes on, and they have a lot of people who give to them. If you choose to ask people to give to your local congregation, the Heart and Stroke probably won't miss that money, but it might make a huge difference in the life of your congregation or mission and service. Or again, this can be all of the above. It doesn't have to be either or. But think about asking your friends and family to make a gift to something that you really cared about and care about to this day, your local congregation. The pithy little phrase is, give to what gave you life, not to what killed you. Excellent. So that's gift number one, is the ability to ask your friends and family to support something that you love and that makes a difference in so many people's lives as it cares for each other and for its community. Gift number two is a bequest. This is the most common planned gift that churches receive and that the church receives. This is something you do through your will, and very simply, it's a statement that says, I bequeath, I give this to this. So I give $5,000 to Kincardine United Church. You can do it as an actual amount, or you can do it as a percentage of, they call it a residual as well. So after all the bills are paid, after the last income tax is paid, after any specific gifts have been given, I leave 10%, 20%, you pick it, of my estate to be split between Kincardine United Church and the mission and service of the United Church. They're that straightforward and they're that simple. And in the will workbook, there is some sample text that you can use, although your lawyer will be happy to work on that with you. A bequest can be cash. It can also be a gift in kind. You could leave a piece of art. You could leave jewelry. You could leave your house. You could leave your car. I suspect, I know at the national level we won't, and I suspect at Kincardine United you won't. We don't want your children and we don't want your livestock, but you can try.
Or your debts.
Well, your estate will have to pay those first. You can't give those away, sorry. So it doesn't have to be cash. It can be other things besides that. If you're thinking about making a bequest to the congregation that is not cash, and you're comfortable with this, I would encourage you to have a conversation with the trustees, whoever's going to look after the planned giving program in the congregation. Have a conversation with them now and talk about what that could be like. That way, when the time comes, it's not a surprise. And if it's something that the church is going to struggle with, then you can talk about alternatives as an option as well. So it's good to have those conversations when you can ahead of time. Any questions about bequests? Moving on. Charitable gift annuities. In a nutshell, a charitable gift annuity is where you give us, the national church, a chunk of money, and we promise to give you so much each year, paid semi-annually or annually, for the rest of your life. When you sign up for an annuity, and you do that through me, then we will get some information about you, like your age and how much money you're interested in starting the annuity with. And then we'll do a quote for you, so you'll know exactly what the payments to you would be. And you can decide if that's what you want to do or not. And that's, again, entirely your choice. The difference between a charitable gift annuity through the church and the other kind of annuities that you often see advertised on the TV or in the mail, you know, Sun Life and these places, Cash for Life, not the lottery, but those kind of programs. One of the main differences is at the time of your death, with the church's annuity, whatever is left remaining in that annuity goes to whatever church ministry you have designated it to go to.
Not too bad, Ross. I'm right in the middle of a webinar.
When not long after I arrived at Trinity United in Elmira, one of the older members of the congregation died. We did not know it, but he had a charitable gift annuity with the United Church. And so we were pleasantly surprised that we were the beneficiary of that annuity. We received a fairly good sized gift that came from that through that annuity. And we were able to do all kinds of things. We also did tech for the sanctuary. And with what else was left from that, we did solar panels on the roof of the church building, so we didn't have to do any fundraising to make those happen. And that they're helping pay back some of that money, so they're still going to have use of that. That was a gift that keeps on giving. But at the end of your life, whatever's left, the residual in that annuity, goes to the whatever United Church beneficiary you designate it to go to. When you set up a gift annuity, you get a tax receipt immediately for a portion of the annuity. There's math and tables and calculations that I don't have to know about that happen. You will know this as part of the contract that we set up with you. That amount is based on an estimate of what may be left as the residual that would be given at the end of your life. So it depends on your age and those types of things. There are no medical questions involved in any of this, by the way. Oh, and you have to be 60 in order to take out an annuity. So if you're under 60, this is not for you. Oh, and I should mention that the payments that come to you a portion of them, and lately it's been all of that, all of the 100% of those payments come to you tax-free. So you don't have to pay taxes on that income. The church uses the funds that you give along with the others that it has to give you that guaranteed income for life. That's the purpose of the annuity. So if you're looking for a planned giving option that will make a gift at your death, but will earn you an income until then, the annuity might be the vehicle for you. Any questions? Who underwrites this annuity? It's done by the United Church of Canada. We're one of a very, very few denominations in the country that are allowed to do annuities themselves. So they're not done through an insurance company or other outside body. Okay, life insurance. Very simple. You can take a current life insurance policy that you have, and you can set the church to be the beneficiary of the policy. When you die, the church gets the money that pays out from the insurance policy, and your estate gets the charitable tax credit for the gift that was made. Simple. With most life insurance policies, you can also have multiple beneficiaries. So again, it doesn't have to be all or none. We know that people want to and need to take care of their kids and their grandkids and their families. Of course we do. I do too. What we offer as a suggestion to people is what we call the charity child. And that's different than my kid's a charity case. That's where I look at, okay, so I have 3 boys, and I've done this with my will, not through a life insurance policy, but you could there too. I have 3 boys. So rather than simply dividing the estate 3 ways between them, I've divided it 4 ways. 1 for Josh, 1 for Benji, 1 for Nathan, and 1 for my charities. And then I decide how I want to split that up between them. So that's an option for most of these gifts, definitely for the life insurance policy. Now, you can also take out a new life insurance policy and set the church as beneficiary. And when I say the church, that's like any variety or ministry within the church. It could be Mission and Service, it could be Kincardine United, it could be whatever. And as I said, then what happens is you die, the money goes to the beneficiary, your estate gets the tax credit. Now, the other option that you are able to do would be to actually gift the life insurance policy. So in that case, you would set the church as the beneficiary of the policy, and then you would give the policy. So you transfer the ownership of the policy to the church. Now, there's a couple of things that happen if you do that, and there's a couple of reasons why you might want to do that. First, when you transfer the ownership of the policy to the church, you, right now, immediately get a tax credit for the current value of that policy. Not what it will pay out upon your death, but its current value, because that's its value, and you get a charitable receipt for that gift. If you still have premiums owing on the policy, and you transfer the ownership of the policy, then you are going to continue to pay those premiums. The church is not going to do that for you. But those premium amounts also then count as a tax credit for the tax credit because they're a gift to the church to pay those premiums. So right now, while you're still living, you will first get the tax credit for the value of the policy, and then every year thereafter, as long as the premiums need to be paid, you'll pay them, and you'll get the tax credit for that value as well. When you die, the policy pays out to the church, which is the beneficiary, but your estate does not get a credit then because you don't own the policy. It's not yours. See the difference? So what choice you make about that to a larger degree depends on when you want the tax credits. If you need those tax credits yearly because you're paying those premiums and getting a credit, then you want to seriously think about transferring the ownership of the policy to the church. If you want your estate to get the credit, because it's probably going to be a fairly significant credit, then you want to keep the ownership of the policy for yourself. And if Kincardine United Church doesn't want to deal with this, and they don't want the hassle of tracking down who paid the premiums this year and who didn't, and dealing with all that stuff, then this is one of those things that the United Church Foundation will do on behalf of the congregation. Or if you wanted the beneficiary to be mission and service, then there's not necessarily a need for Kincardine United to be a part of that. Then you talk to me, and the ownership of the policy then gets transferred to the United Church Foundation, and they look after it. And they'll come chasing you if you don't pay the premiums and that type of stuff. Okay. Life insurance is a great way for younger folks to be able to make a large gift at the time of their death without knowing what their financial situation will be when they get to be hopefully that much older. It's also a nice way to use a policy that you maybe don't need anymore. You know, most of us bought life insurance when we had kids because we wanted to make sure our kids were cared for. And now I hear repeatedly, not from mine granted, but I hear repeatedly from people, you know, my kids really don't need the money. They've all got good secure jobs, and they're happy, and they don't need it anymore. So this might be something you can do with a life insurance policy that you don't have the same need for as you once did. RRSPs, RIFs, and TFSAs. I had to practice to say that quickly. These are savings vehicles that we can all use. We can also set a beneficiary for them. Does it apply to whole life and term? Yes. Sorry, we're back to the insurance question that was in the chat box. Yes, you can set the beneficiary to be the church for either whole life or term. I'm not sure how that would work with transferring the ownership of a term policy because it's only for a term. So that would be a good question to ask your life insurance agent. Okay. Sorry, any other questions about life insurance? Okay. So if you have RRSPs that haven't been turned into RIFs yet because you're not old enough, or if you've got a RIF because they have been, or if you have a tax-free savings account, then you can actually set a beneficiary on those, and that makes sure that they get to who you want them to get to by bypassing the estate and probates and all that stuff. There are still taxes that have to be paid on the RRSPs or on the RIFs, of course, because they're tax-deferred savings plans. But whatever's left after the taxes have been paid then becomes available to be given away to earn your estate a tax credit as a charitable gift. So think about, that's another one of those things we have in pocket number 2 that we maybe haven't thought about. You know, what do we want to happen to what's left? I'm starting to hear more and more about older seniors, especially older seniors who are on their own, who, you know, the government is requiring them to take out a certain amount from the RIF every year, but they did a lot of good saving, and maybe they have a pension as well, and they're now actually expecting they're not going to need all that money to support them until the end of their life. And so what are you going to do with it? How are you going to use it to make a difference in the world and live out your faith? Whoever you hold your RRSP, your RIF, or your TFSA with will have a form that you can use to set a beneficiary. If it's your bank, talk to your bank. If it's your financial advisor, part of the team, talk to them. They'll know what you have to do to set the beneficiary up for those. Any questions about that? Okay. Gifts of stocks or mutual funds, publicly traded securities. You don't have, remember I said, you don't have to die to do this one. You can do this one tomorrow if you want to. It's great. So let's say that Gord, back in his young, carefree heyday days, decided that he had a little extra money kicking around, and so he went out and he bought 100 shares of this this company had a really weird name. It was called Apple. They were like, I don't know, 50 cents a share or something like that. It was a joke. But Gord kept those shares. They're worth a wee bit more now than 50 cents a share. So Gord could choose to sell his Apple stock and give the proceeds of that sale to the mission and service of the United Church of Canada. And we would thank him profusely for that. And we would give him a tax credit for the amount of his gift. Easy peasy. However, when Gord does his income tax for 2020, he will have to report to the government that he sold those shares at a profit, and that profit is called a capital gain. And the government will say, you are going to be taxed income tax on 50% of that capital gain. So making that gift to the mission and service of the United Church cost Gord money that he has to pay in his taxes. Now, maybe his tax credit will offset that. Maybe not. What we would encourage Gord to do instead is to make a gift of the shares to the church for mission and service instead. Don't cash them. You've made a gift in kind then of the shares. You get a tax credit for the value of the shares when they're sold. And if you do this through the United Church Foundation, and we have a form for that, and I think I included in the stuff I sent to Gord, so you have it, then the United Church Foundation will sell those shares on the day they receive them from your broker, and you'll get a tax credit for the value of the sale. But because you never sold them, you never generated a capital gain, so you don't have to pay taxes on that. The church sold them, but the church doesn't pay taxes. So everybody wins. I'm finding people are starting to, as they get up in age, they're starting to use this way of giving as a way to give to their local congregation for their annual giving. Instead of doing it monthly or weekly through their envelopes or through PAR, they're doing a stock transfer once a year through the United Church Foundation, and the foundation cashes the stocks. They get the donor gets the tax credit, and the donor gives the instructions on what happens to the proceeds. And so then the foundation sends the money to Kincardine United Church, and that person has done their giving for the year. Instant. There is a one-time charge for the transaction that the United Church Foundation charges, because this is what the discount broker charges them. So they're not making money on this. It's $9.95. Not much. And if for some reason you don't want your congregation to get all of your givings all at once, then you can give instructions to the foundation, and they will do, you do the stock transfer. The foundation, again, cashes them in, you get the credit, and then the foundation will create a small gift fund in your name, and they would then pay that money out monthly to Kincardine United Church, or quarterly, or however you wanted it done. So it's a way that you can give now. It's also a way you can give later, because you can do the same thing with your estate. So those stocks, when you die, they still have to be processed. Oh, that's a really good question, Greg. Can the beneficiary decide to give the church the stock from the estate, even if it's not something the deceased has put in their will? My instinct tells me the answer would be yes. They could do that, as long as the stock, the proceeds from the stock wasn't required to be given to something else that the person had, that the deceased had put in their will. So for instance, if the deceased had said they wanted to give $100,000 to the Cancer Society, or to their kids, split between their kids, and in order to do that, you need some of those stocks to be sold, you'd have to do that. And then whatever was left, the executor would have the authority to do as they wished with, to dispose of, and could make a gift. But again, check with the lawyer. That's why we have a team. Yeah, good idea. It does bring to that point, though, that when you die, if you have shares, mutual funds, or stocks, they have to be liquidated, and they will generate capital gains unless your will indicates otherwise, that they're to be given as they are to something or somebody. So maybe you look at the whole of your estate, and you should, and you decide that, okay, I can use my securities, my stocks, to make my charitable givings, and I can use the other stuff to give to my kids and family. And that way I don't have to pay, my estate doesn't pay the capital gains on the stocks, but everybody still is taken care of. Okay, this is becoming more and more popular. Your congregation could choose to process this themselves if they wish to, and that's fine. But if they don't want to get into it, as I said, you can do it through the United Church Foundation. It's one of the services we provide for people. Any other questions about making gifts of stocks or mutual funds? They have to be publicly traded. That's the one caveat. So if you have shares in your family business and that family isn't traded on the market, on the stock markets, then you can't do this. Okay. Endowment. Endowment is a word that you're probably familiar with. I've heard it used, I've heard the meaning of it used already in the conversation tonight. An endowment is a gift where you do not use the principal amount of the gift. You only use the income that the gift, that principal amount generates to give to organizations or to do ministry. So when Kincardine United receives a bequest, and they decide, or the donor has stipulated that you're not going to spend the principal, you're just going to invest that, and you're going to use the income that it generates to do ministry, you have in fact created an endowment with that money. That's now an endowed fund. Endowments, the beautiful thing about them is they're the gift that keeps on giving, because they last forever. You can do this again through your local congregation if you wish to. You can also do it through the United Church Foundation. So through the foundation, if you choose to, we'll set up a fund agreement with you, and you will make a gift to the foundation into your fund. You decide what ministry that fund is going to support, and then it happens. The funds that the foundation has, the endowment funds the foundation has, are invested in a balanced mutual fund through Fiera Capital, and the income they make varies. I'm not even going to speculate what's going on in 2020, but prior to this, they'd done very well. Once your fund has $15,000 in it, that's the point at which it will start to grant money out. What it does is it grants out 3.5% of what it makes that year. And that's actually balanced, averaged over a couple of years. And there is a up to 1.5% administration fee that the foundation charges. That is what allows them to do their work. So that's 5%. 3.5 that goes to whatever you stipulate it to go to, up to 1.5 for the foundation. So anything it earns beyond that, and as I said, prior to this year, most years it was, they were 6, 8, even up to 10% sometime over the last 5 years. So anything it makes beyond that gets added into the endowment fund itself. So that's how the endowment grows, other than people putting money into it. You can also choose to add money to an endowment fund that the United Church Foundation already has. So it has an endowed fund for mission and service. And every year, the 3.5% proceeds from that endowed fund go to do the work of mission and service. So if you want to support mission and service long-term, you could choose to give money to that endowment and do that. There's endowments for most of the different areas of ministry that the United Church is involved with. And so if you're interested in something like that, talk to me, and we'll see what already exists that you might contribute to, rather than setting up something else that would not be as economically sensible to do. But if you've got a specific ministry that you're interested in, that's the way to do it. Endowed, the other kind of fund other than an endowed fund is just called a long-term fund, and that's where you actually do spend the principal amount as well. And again, we can set those up through the foundation. I know of a few people who have done that They've got the fund all set up so that when they die, the fund gets populated out of their estate, and then that fund is used over the next, depending on how the markets go, 5 to 10 years to continue to make their annual giving to their local congregation and to mission and service. So, I mean, it's a way you could continue to give to Kincardine United Church just as you do now for as many years as the money lasts after you're gone. It's kind of neat idea. And again, if you want more information on either setting up an endowment of your own or contributing to one that already exists, just talk to me and we'll see what we can do. Any questions? This really becomes one of the first questions you need to think about and answer for yourself is, what do you want to support? Your congregation? Your region? Mission and service? Rural development and relief? The foundation itself, because the seeds of hope and a lot of the granting for new and creative ministry is all coming from money that has been given to the foundation to do that work. Other outreach ministries, camps. What do you want to support? Because once you figure that out, then we can talk about how you're going to do it. And that's exciting work, because that's the work of loving and caring and discipleship. And I'm here to help you. I'm here to help you change the world for the better and support the causes you love, because it's your action and it's your generosity that really does change lives. And that's really exciting. It's quite wonderful to think about that. You change lives and you save lives when you're generous. So thank you for listening. Thank you for your willingness to consider this. Thank you for the ways you're already being generous and making a difference in so many lives. Thank you, thank you, thank you, thank you.
Thank you.
And this is my contact information if you want to talk to me directly, and Gord has that as well.